Hello, this is Japanese Economic Review Channel. Today, we're diving into a really fascinating story coming out of Japan's property market. The latest report from the Real Estate Economic Institute just dropped, and it shows something wild. The number of new condos for sale has barely budged. But prices? They are absolutely skyrocketing to historic highs. So what on earth is going on? Let's get into it.
Let's just start with the big headline number, 65.56 million yen. Just let that sink in for a second. That was the national average price for a brand new condo in Japan in 2025. It's a massive figure for sure, but the real story here is what it tells us about a market that's being pulled in completely opposite directions right now.
And to be crystal clear, we're not just talking about a high price. We are talking about the highest national average that has ever been recorded. This new record paints a picture of a market with this serious identity crisis, and we're about to see just how deep that split really goes.
So, here's our game plan for today. We'll kick things off with the big national picture, and then we're going to drill down into some really surprising differences between regions. After that, we'll tackle those record-breaking prices, see which companies are really running the show, and finally, we'll peek into the crystal ball with the forecast for 2026.
Okay, first up, that national overview. The big theme for 2025 is this incredible contrast, a real economic head-scratcher. It's a classic tug-of-war between supply and demand, and the result is anything but straightforward.
And here's that puzzle laid out in the numbers. Get this. The total number of new condos sold across the entire country barely moved. It only went up by 0.8%. But at the exact same time, the average price, it shot up by a staggering 7.8%. The main takeaway here is simple but so powerful. Supply is basically flat, while prices are just hitting the gas pedal hard.
Now, to really get why that's happening, we have to look at the regional data. And believe me, this is where the story gets really juicy. A massive divide is opening up between Japan's two biggest economic powerhouses.
Just look at this split. It's like two different worlds. In the capital region, that's Tokyo and all the surrounding areas, the supply of new condos actually fell by 4.5%. But then you look over at the Kinki region, home to Osaka and Kyoto, and supply jumped by almost 12%. These are completely different stories playing out at the exact same time.
And it wasn't just the Kinki region that saw a big surge. The published statistics show some pretty dramatic growth in other parts of the country too. For instance, the Shikoku region saw supply jump by an incredible 83.7%. It's really clear that the market is heating up way beyond just those two main hubs.
So this huge difference in regional supply leads us right to the most dramatic part of this whole report, the prices. And this is where the numbers get, truly staggering, especially when we look at the Tokyo area.
Here it is, 91.82 million yen. For the very first time in history, the average price for a new condo in the capital region has blown past the 90 million yen barrier. That is just a stunning figure.
And to put that into perspective for you, that's a price jump of more than 17% in a single year. That kind of acceleration, that kind of rocket fuel is something we just haven't seen in this market in a very, very long time.
And the contrast with the Kinki region is just as stark when it comes to price. While Tokyo's prices were soaring into the stratosphere, the average in the Kinki region actually dipped just a little bit, holding steady at around 53 million yen. This is creating a massive and growing affordability gap between Japan's two biggest cities.
And look, this isn't just our take. Right here, you can see a snapshot directly from the official published summary. This is their data. It grounds our entire analysis, and it shows you in black and white that stark contrast between the capital and Kinki regions and the overall surge in prices nationwide.
So, a natural question is, who are the companies actually behind all these numbers? Well, the report gives us a really clear ranking of the developers who are supplying the market. This table lays it all out, the top 5 developers by the number of units they sold. Presence Corporation is leading the pack. And right behind them, you've got 4 of the most established giants in Japanese real estate: Nomura, Sumitomo, Mitsui Fudosan, and Open House. It's pretty much the who's who.
And here's a little interesting tidbit from the report. It highlights that this is the first time in 5 years that Presence Corporation has grabbed that #1 spot.
So that's a pretty significant comeback for them in what is a very, very competitive market.
Okay, so that's the story for 2025, but what about the future? Where are things headed? Luckily, the Real Estate Economic Institute also gives us its official forecast for what we might be able to expect in 2026.
So, looking at the whole country, the forecast is calling for a bit of a rebound in supply. The Institute expects about 62,000 new units to come onto the market, which would be a nice 3.4% increase over 2025.
But here's the real twist. Remember that wild regional split we just talked about? Well, get ready for this. The forecasts predict a complete flip-flop of the 2025 trends. The capital region, where supply fell, is now expected to see a 4.7% increase. Meanwhile, the Kinky region, which had that big supply jump, is now forecast to have a 5.4% decrease. What a turnaround.
And this brings us to the biggest, most important question for 2026. After a year of shrinking supply and absolutely mind-blowing prices in the capital region, will this predicted increase in new condos finally be enough to cool down Tokyo's red-hot market? That right there is the key thing to watch, and I guess we'll just have to wait for next year's data to see how it all plays out. Thank you for watching the Japanese Economic Review. We look forward to having you with us again,